U.S. indices get crushed for the week as Jerome Powell flubs the press conference. Before we start, a quick word from our sponsor. This video is brought to you by XNest, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The Nasdaq 100 initially did try to rally for the week, but gave back gains above the 22,000 level. This could be laid firmly at the feet of Jerome Powell, who destroyed any confidence that the market might have had in the Federal Reserve during the press conference. To be as ridiculous as to suggest that it's high prices and not inflation that is hurting Americans tells you just how feckless he's become. At this point in time, the market seems to be voting with its feet, selling risk assets, as the Federal Reserve monetary policy now is about as clear as mud. There are signs that they will stay tighter for longer next year, which is an argument that anybody who can read inflation metrics has been making, but it seems like Wall Street just got the message. This pullback is rather vicious and could continue, but the reality is it's just about 5% back. It's just the rate of change and the speed in which we've seen it that makes it so dangerous. The Dow Jones 30 had been falling to begin with and has suffered another pretty significant pullback for the week, about another 4% or so, as we go plummeting towards the 41,750 level. If we can bounce from there, then it'll be no harm, no foul by the time it's all said and done. But again, you can thank Mr. Powell for this. If the market were to break down below there, then the 50-week EMA comes into the picture, perhaps offering support as well. But you also have to keep in mind the time of year, and that's part of what's being played out here as well, with only degenerates and gamblers jumping into the market between Christmas and New Year's. Most people were taking profit anyway. The S&P 500 has fallen pretty significantly for the week also, and as I record this is down about 4%. And again, it's not that it's down 4%, it's that it's down 4% in 2.5 days. So the question now will be whether or not the 5,800 level holds as support. We'll have to wait and see. Next week could be very quiet because of Christmas being in the middle of it, or it could be a big mess because of a lack of liquidity. You just don't know. That being said, 5,800 is an area I'm watching, followed by 5,600 for support. My name's Christopher Lewis. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and subscribe for more analysis like this.